Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody. Happy Sunday morning and welcome to another episode of the AccessATrade.com weekend update show. Hope everybody is having a great weekend. Got a little bit of a cold here, trying to fight through it, allergies, all that good stuff. So hopefully you guys are having a pretty good weekend, and hopefully you guys had a pretty decent trading week. So here's a perfect example. Perfect example last week how the indexes, right? The strength of the indexes didn't match the quality of work, right? Everybody knows, I'm primarily, let's say 90-95% beta names, right? Reason why I like trading the beta names, again, for all you guys who are joining us first time, whether it's StockTwits, Facebook, Twitter, we do these weekend broadcasts every weekend, okay, every weekend, and this obviously video goes out to our community Monday through Thursday. And the one thing that I always talk about, the lack of relevance now. I mean, this has been for years, but the lack of relevance on the indexes and how the indexes do not provide you a kind of an accurate view of what the market's actually doing. So for example, for me, like I mentioned earlier, I trade predominantly the beta names, Tesla, Amazon's, Netflix, Nvidia, stuff like that. And again, the reason why I trade them, I believe, again, if you're joining us for the first time, I believe that number one, 90% of retail is not represented in these moves. Okay, that's number one. Again, if you look at social media, just to give you an example on social media, well, there's small cap alert, services, whatever you want to call them, they'll have 1,000, 2,000 people in there, right? And whatever they're charging, $60, $70, $100, whatever the case may be, it doesn't make a difference. But the reason why they have 1,000, 2,000 people in there, right? Because everybody's trading the same $2 stock, right? Because the majority of those 1,000 and 2,000 people that are in those places trying to trade the same stock is because majority of them have small type accounts, right? They have small type accounts, and there's nothing wrong with that. I'm not saying one way or another. I'm just making a factual statement. They all have smaller accounts, and the only way they can grow an account is by trading a smaller cap stock, right? Smaller cap stock, it's much easier to buy 1,000 shares of a $2 stock than buy 1,000 shares of a $300 stock. It's just a fact. So the reason why I trade beta, I've been trading beta for many years. Those type of traders, right? Those type of traders, and there's nothing wrong with having a small account, but those type of traders are not represented in beta names. They're just not. It's very, very small chance that if you have a $5,000 account, you're going to be trading Tesla. If you have a $5,000 account, you're not going to be trading Amazon, right? You can be trading, the pot stocks, which again, that's fantastic. That's your thing. That's your thing. Again, to each his own. But the reason why I trade beta is because majority of retail is not represented. Two, you can see a very, very specific bias, whether it's via the options market or just by watching order flow. And the moves are pretty predictable most of the times, because when technical analysis gets confirmed, okay, the fact that the lack of representation of retail is not there, it makes these players in these stocks, the algorithms, whatever the case may be, the hedge funds, pension funds, it's easier for them to move, right? It's easier for them to move. That's why you can see a move on Amazon, for example, a 70-point move in 3 days or in 2 days, because again, it's all being driven by institutional order flow, and well, retail again is on the sidelines. So this week was a little odd for me, right? Very, very odd for me. Probably one of the oddest weeks I've traded in a very, very long time. If you look at the scoreboard, right? If you look at the scoreboard, you'll see that the Dow had a really, really strong week, right? Over 2% for the week, and the NASDAQ was flat, right? The NASDAQ was flat. And when you look at a scoreboard and you say to yourself, oh, wow, look what the Dow did. Look what the market did. And this is what the passive retail public is looking at and said, this must have been a really, really strong strong week for equities, and it was for a certain couple of groups. Banks woke up. Banks woke up this week. I mean, when was the last time you saw a move on Goldman Sachs that you could actually trade? It comes like once every month, and if you look at this chart, it actually represents that. So you have a nice 2-day move in the banks, right? The Goldmans, the Bank of Americas, the Citibanks, big option flow on these names. Big option flow on these names. And then you kind of had the pot stocks, right? Which again, phenomenal moves, absolutely phenomenal moves. Everything was going nuts. The predominant player. And again, people ask me all the time, well, what was the internet like? And unless you actually saw it firsthand, okay, it's very, very tough to explain to somebody how the market structure during the dot-com days was versus where we are now. And, when we saw a stock like TLRY, and I only noticed, again, I don't follow this stuff at all, but when I noticed TLRY, it was like 2 weeks ago, and it was at $100 a share. And I said, oh, okay, this is, kind of interesting. Maybe it's something I should watch, down the line. Maybe it consolidates, maybe, because again, I understand about the whole cannabis legalization explosion, all that stuff. But again, for me, I can't trade these stocks because, again, the liquidity, I saw the liquidity in these things. They're 100, 200 shares. They're $1 wide. Ridiculous. I think I read somewhere that 75% of the shares are owned by like one fund or one investor, whatever the case may be. I didn't get too much into it. So, you saw this massive move, right? Massive move on TLRY. And I started watching it. I started really watching it around $150 that day. That went from like 150 to like 300. And I was picking up my kids. I was picking up my kids from school. And every time I clicked on refresh the CNBC app, I was sitting there and I saw this thing go up $10 at a time, like literally $10 at a time. And I kept on saying to myself, well, I know for a fact I wouldn't be buying something like this. But I know for a fact I wouldn't be selling something like this as well. Because number one, I looked at the borrow rates, and depending where you traded, some people had really good borrow rates on this thing, like $5-6, right? Like $5-6, which I know it sounds crazy, but when you have a stock going from 150 to 300, $5-6 is actually not a bad a deal. But I also saw some ridiculous rates, and some of my buddies, and I spoke to some people in the live webinar as well. There were some borrow rates on this thing was from like $200 per 100 shares to like $600 per 100 shares. So if you're borrowing 1,000 shares, right? 1,000 shares. Okay, if you can even get a locate of 1,000 shares, it would cost you $200,000. Okay, it doesn't even make sense. It doesn't even, unless I'm doing the math wrong. It doesn't even make sense to even look at something like this. So something like this, they were going nuts. The banks on a 2-day run, which I didn't participate, were going nuts, and that's what kind of left me with beta. And if you look the majority of the week on beta, it was really tough sledding. I mean, really, really tough sledding. And I usually don't make a statement like that because, like I say, the reason I trade these things because they have such a big of a range that you can trade them to the long side, you can trade them to the short side in the same day, in the same interval sometimes, and get some value. But we started seeing really choppy moves. And I usually don't use a word like that because my process is so unique that unless there's a very, very specific interval that's so tight and then we go through kind of distribution, I can still make hay, right? I can still make hay in these channels despite how choppy the normal market is. But what I started seeing was a complete disconnect, right? Complete disconnect. Even those days that you saw the Dow up 200 points, like 3 consecutive days, and even one of those days you saw, for example, the NASDAQ composite up 80 points, I started seeing, well, what's participating in this rally? Like what's moving up in this rally? And I started looking at the NASDAQ 100 participants. And this is where I knew there was something wrong. And it wasn't just me, it was literally something wrong. So you can make an argument that the biggest components of the NASDAQ 100 is semiconductors, right? You got the semiconductors. And if you look at the semiconductors, just from the point of technical view, they were bullish, right? We got above the 10-day moving average and we started building, right? So that's bullish. If you look at the NASDAQ 100, for example, the QQQs, they did exactly the same thing. They got oversupply and they started building. So that's bullish. And then you started looking at the individual members of these components and you say to yourself, well, how can this market possibly going up if the individual players are not moving, right? So I started looking at charts. You started looking at charts, right? You look at Intel, right? Intel underwater. You look at Micron. You had that, you had that move, big move down. They came out some earnings, blah blah blah. They still, still went lower. You look at Nvidia, and again, a couple upgrades this week. Couldn't get out of its way. Xilinx was the only one. Xilinx was the only one that's actually very, very strong, good option flow on this thing this week. But this was the only one. You look at the rest of the group, right? Like Maxim can't get out of its own way. Clack, again, not tradable, right? AMD, again, has been a great story, right? It's been a great story. But you can see the round. I mean, you can see all the red candles, the rounding top that's being formed there. You can see it. You can say whatever you want. The stock's going to $50, $60 a share. You can say what you want. This is as of right now, this is a rounding top. And if this thing starts confirming 30, 50, it's going lower. So you can say what's going to happen 2 years from now, or a year from now, 3 weeks from now. But again, if this rounding top confirms, it's going lower. And again, you started looking at all the players in the NASDAQ 100, right? Netflix, again, it was about to rally. It was about to rally. And again, I caught Netflix on Friday. I caught Netflix several times this week. But they just couldn't make that extra violent, aggressive push. Again, red flag, right? Red flag. You look at Facebook, for example, right? Right, Facebook had a couple of days of dead cat bounce, came right back in, right? I mean, and on and on and on and on. You had Twitter, again, next leg down. What's going high? Maybe Apple, right? Apple definitely. No, Apple started going lower. Amazon sure as hell probably strong, right? Going lower. Google, right? Google's definitely strong. Going lower. Alibaba, China crisis is over. Finally had the dead cat bounce for 2 days. Turned around, going lower. So you kind of get my point. So we started seeing a lot of names, right? A lot of names starting out strong, going weak. And right when they're about to confirm to the downside, they got strong again. So those channels started to, instead of the channels started expanding, they started contracting more and more as the week went on. And some of these pivots that I'm used to getting $1, $2, $3, $4, were now going up 50 cents, 70 cents, 80 cents. I'm like, well, what the hell's going on here? And that's how the week that's how the week started. The middle of the week was a little bit better, right? And towards the end of the week, you had to really kind of pick and choose your spots. So I think, here's a perfect example. And we say this all the time. Like, my week was very odd. I had a very, very odd week. Monday, I lost money. Okay, Monday I lost money. I was in the right trade, right? And this was kind of the trend that started really, really early. So Monday, I put on a Tesla trade, went higher, right? Went higher. Usually, if it stalls out going higher, it'll usually give you a chance to get out, because again, there'll be kind of a remount off the kind of a trigger, and they'll give you at least a second chance. Didn't do it. So it ran up $1, came back in on me. I shorted Netflix, went down about 70, 80 cents. Came right back up. And I started seeing this cycle over and over and over again. Apple broke down, right? Went down $1, snapped right back up, rallied another $2.50. So I really couldn't get going. Like, I couldn't get going at all. Like, everything I was putting on was right. Okay, it was going my way, and then it kind of just stalled out for a second. We said, well, okay, here comes distribution. The longer it stays below those levels or above the levels, it's going to go. Never did that, and went the complete opposite. So I lost money on Monday. Okay, I lost money on Monday. On Tuesday, it was okay. I made that day back. It was okay. Wednesday was fine. Thursday, again, just another example of how weird this week was. Thursday, again, same thing that happened to me on Monday. I was getting the directional bias my way. Every trade I was putting on was going my way. So instead of using break even as my stops and taking some cash flows, I started giving the market more the benefit of the doubt, and all the ingredients, all the evidence was telling me, just use break even. And it took me 4 trades on Thursday to get green on the day. It was just not my prototypical week. Friday was fine. I caught Netflix at the open pretty decently, and I traded some little small cap stock, and then actually one other trade I made some money, and I forgot which one it was. I broke even. So I did okay for the week, but it was not a week that I usually would turn around and say, wow, this was some super action. Everything was going super smooth. And, it really, really made you appreciate when the market is very, very fluid, and your spotlight and your process is being really, really spotlighted. You really have to get aggressive, because when you start seeing some hesitation, If you start seeing some hiccups, obviously it's not what you're doing. It's obviously what the market is giving you. And again, guys, especially new traders, you have to keep this in mind. The market doesn't owe you anything. Okay, it doesn't owe you anything. Okay, it's not. You're not entitled to make money. You're not entitled, to grow a legacy. You're not entitled to make a fortune. The only job of the market is completely to separate you from your money. Again, it doesn't make a difference if you're long or short a particular stock. Okay, it doesn't make a difference. The stock is still going to do what it has to do. That's why pivots are great, because they're organic. They're either going to go or they're not going to go. I don't need to be in the trade. You don't need to be in the trade. They're either going to work or they're not going to work. And unfortunately, because of the big influence on social media, you're drawn in, right? You're drawn into this, right? You're drawn into this, okay? And unfortunately, when you're a new trader, you don't even realize that you are drawn in by the sexy. You're not drawn in by the substance. You're drawn in by the sexy. And when you're trading a stock like this, you have zero advantage. You have absolutely zero advantage. You could get lucky, right? You can get lucky, but how do you justify, right? How do you justify going long or short? Again, I get the whole thing. If you shorted at 300, God bless, God bless. And again, realistically, the chances of success was on your side, but the probability of the stock going from $35 to $300 could have went easily to $400 or $500 a share. So don't confuse making money with being right. Right? Don't confuse the two. Sometimes you'll make money and you're wrong. Sometimes you lose money and you're right. But so the market doesn't owe you anything. So when I see my process kind of stall out, okay, or there's something wrong, or there's trades that I've been making money on for years are kind of stalling out or just giving me a different vibe, I take a step back. I take a step back. Again, and I said this and I tweeted this out on Twitter. Come next March, I will be responsibly taking losses for almost 20 years. Okay, I've been literally, that's the greatest, greatest thing I can pass on to a new trader. I've been responsibly taking losses for 20 years. And when you talk about the game of longevity, as a new trader, you have to put yourself in a position not to win today, but be around for tomorrow. So unfortunately, a lot of new traders, they come into the business because it's so easy to get into. Okay, people during the .com craze, a lot of them, when they didn't have jobs, they created their own job, right? It wasn't that hard. Okay, it wasn't that hard to open up a brokerage account and start clicking the mouse, right? It just wasn't that hard. So a new trader, when you're coming into the game, and this is not a real business, okay? Anybody who's telling you this is a real business, they're blowing steam up your ass. This is not a real business. I've been doing this now nearly 20 years. The active investor, going back to the SOS bandits, right? The small order execution system, right? The SOS bandits. The SOS bandits maybe started, 4 years before me? So they were kind of the first active traders, right? Kind of the active traders going back to 1995, maybe 1996. So this isn't a real business, okay? This isn't a real business. This is all about trial and error, right? This is all about trial and error, seeing what works, seizing an advantage. And if you seize that advantage, you got to hold on to it like grim death, okay? And when you're not in a real business, okay, and this is not, okay, when you're not in a real business and you're an active trader, you have to constantly, really, hone your craft, okay? You can't rely on some guy with some BMW avatar on social media telling you this is the next TLRY. Okay, you have to really get control. And again, guys, I tweet this out all the time. And again, I have an online business just like a lot of people have online businesses. But if you're a new trader and you have a $5,000 account, are you really that lazy to pay somebody $3,000, $4,000, okay, to show you how to set up your charts, to show you how to scan for stocks? Really? Are you really that lazy? And you see it all the time. Well, this guy's a fraud. I sent them $5,000. Why the hell would you possibly send somebody $5,000 to show you how to do research, how to set up the charts? This is just common sense. Certain things are common sense. When you're a new trader, your only job, and again, guys, I say this all the time, your only job as a new trader is to make it to the next day. That's it. And it sounds so simple, but it is really one of the hardest things you can possibly do as a new trader, okay? Because you have so many distractions. You have the TLRYs, and I say this to a new trader, if you have a $5,000 account, why are you even looking at this thing, right? I have no advantage of this thing. I have zero advantage of this thing, okay? Guys that I know who've been trading for years and years and years, we didn't even look at these things. Maybe we should have, right? Maybe we should have, but again, we're kind of boring, right? We're kind of boring. We kind of have our own niche, right? We have our own niche, and again, a stock like this for me, is ridiculous. 100 share lots, $1.50 spreads. God bless it. This thing goes to $5,000. I hope you make a lot of money. But for somebody like me, I can't control a stock like this. So for me, it's just not interesting. Just not interesting. It's cool to watch, cool to talk about. But for a new trader, if you're fixated on this, it's ridiculous because, again, your job, right, is to figure out market structure. And you don't need to pay anybody $5,000, $3,000, $2,000 to show you the bare bones of what market structure looks like. So instead of looking for an entry at $189 a share or $250 a share after the stock, oh, by the way, 2 months ago was at 34, again, why don't you look at an Apple, right? Why don't you look at an Apple and say, all right, here's the bottom of the range. If it takes it out, it should give me a better move, right? You can see it. Visually, you can see it, right? Maybe it goes lower, and it does. Instead of looking at TLRY, maybe look at a Yelp, right? Maybe you look at a Yelp. This thing saved me twice this week, right? Saved me twice this week of stocks that I usually maybe wouldn't look at it every single day. But again, they're much more organic. Okay, a chart like this, right? A chart like this. Okay, actually, my first entry was right over here. But instead of looking at TLRY, look at a stock that's had a big move, right? Consolidated. Remember, the longer the consolidation, the bigger the move. And the move on Yelp will be just as explosive to your profit and loss and your ability to control a stock than TLRY, right? Again, as a new trader, all I'm trying to do is get to the next day. All I'm trying to do is control risk. All I'm trying to do is absorb and trying to really comprehend market structure, okay? So why buy TLRY after a move from $34 to $258? Why buy TLRY if you can buy a stock that's breaking out on a consolidation on a 2 months consolidation again, right? Just market structure. So the more you understand, the better your chances are to make it to the next day. And when you're trading and you have a $5,000 account, a $3,000 account, $10,000 account, an $18,000 account, you don't have, you're fighting your own demons already, okay? Because this is not a real business, and this is why people are so easily taken advantage of, because they can show you the way because they know, okay? If you're taking advice from a kid's been trading for 4 years, 3 years, what do they know? Okay, they're not even comfortable in their own skin. Okay, if somebody's telling you, I had a great month, this is the greatest market of all time, I'm up $8,000. Well, how can this be the greatest market of all time when you have 2,000 people buying stock after you, and you're telling me you're up $8,000 in the greatest market of all time? Okay, God bless, right? God bless. So new traders, save your money, right? Save your money. If you want to learn market structure, there's plenty of great free content, okay? Great free content all over, all over YouTube. Japanese candlesticks, Fibonacci's, if that's your thing, Bollinger Bands, different strategies, different things. Again, full disclosure, you'll never find the PS60 on YouTube, right? It's free content. But there's plenty of great sites you can go on who will give you the bare bones and the bare essentials to at least put you in the driver's seat that you don't need to spend $5,000 for some kid who's showing you how to set up your charts, right? Again, maybe I'm doing the whole social media thing wrong. If anybody wants to send me $5,000, I'll give you my PayPal. I'll spend half an hour with you showing you how to set up your charts. But it's stupid. It's stupid. Save your money. Go on YouTube. Spend countless hours looking at charts, looking at backtests. So, for example, if you're a new trader, right? And I tweeted out, for example, let's just go through my my Twitter, for example, right? If you go through my Twitter, for example, just something, again, it's free. There's a lot of free content you can get, right? So if you go, for example, on my Twitter account and you say to yourself, well, I want to learn pivots, right? I want to learn pivots. I just don't have the money to spend money, whatever the case may be, right? I just don't have the money. You could go on, you could literally go on Twitter, right? You can literally go on Twitter and say, all right, Dan's posted a bunch of these, pivots, right? Dan's posted a bunch of these pivots. Now, let me try to figure out, right? Let me just try to figure out, why are these spots important, right? It doesn't cost you any money to backtest. Like, why are these spots important? Like, why does Yelp need a solid base over 50, 80 to go to the 52-week highs and confirm that, right? It takes a second. This is free information, right? This is free information that you're getting that you don't need to pay somebody $5,000. Again, I could be doing this whole social media thing wrong right now, right? But again, these are things that you should have basic in your arsenal. These are basic things. Now, again, you could turn around and say, well, you saw when I tweeted out, hey, Netflix is about to confirm. If it confirms, it's about to go, right? 368 needs to build, right? 371 will send it hard. Now, again, all you need to do, I trade on the 60-minute charts. All you need to do in your free time, say, okay, let me punch up a chart on Netflix, right? Let me look at the 60-minute view. Now, again, why was 368 important, right? Just look at the chart. Again, it doesn't cost you any money. You don't need to send me $5,000. You don't need to send anybody $3,000 to figure out how bare bones market structure. Now, again, this is a lot more advanced, and this is a process only we trade. But the point is, you can go back on your free time. So instead of playing Xbox, right? Instead of playing Xbox, instead of playing PS4, whatever the case may be. Why is 368 important, right? Why is 368 important? And again, if you go back and you just realize and say, well, wait a minute, look at this chart here, right? Look at this chart here on the 60-minute. This is the highest candle supply. This candle's high is 367.80, right? Is that what Dan means? 368, right? Is that what he's talking about? 368, 368 important. Now, why is 371 important? Why will this send it hard, right? So you have 368, right? Look at these candles up here, right? 370, 63. So I rounded off to 371. So 371 gets it to 372 and change. So again, how much money does it cost you to take data, right? That basically I'm giving you right now. Take data, and in your spare time, go through my whole Twitter account for the week, okay? I post these pivots constantly, right? All you need to do is spend 2-3 hours on the weekend, okay? If you don't want to, purchase the PS60 Theory workshop, which again, I break down this stuff perfectly for you guys, go spend 2, 3, 4 hours. Invest in yourself, right? These are new traders. Invest in yourself. Bet on yourself. There's nobody to be out there, okay? There's not going to be anybody out there who's gonna give you and look out for you more than you can look out for yourself. Invest in yourself. I have hours on hours on hours of Twitter content of these pivots working incredibly well, okay? Obviously, come into the live webinar, you'll see it live. You buy the workshop, you'll see it breaking down for you perfectly. Okay, so we'll definitely save you some man hours. I get that. Okay, again, I still have an online business. I don't want to shut myself out. But again, at the end of the day, your job as a new trader, all jokes aside, your job as a new trader is to make sure you're there tomorrow. Okay, today's cool. You can make $100 today. Okay, you can make $100 tomorrow. But your job as a professional aspiring trader is to make sure you're around tomorrow. And again, guys, instead of wasting your money, the $2,000, $3,000, $4,000 you're spending, just giving some kid who's been trading for 3 years to show you how to set up your charts, there's plenty of time in the day. There's some great weekends that you could spend in instead of watching Netflix, which I do myself. Instead of watching Netflix, why don't you take a look at these charts and see why Netflix went from 368 to 372 in about, 30 minutes, right? 30 minutes. Is that worth it to you, or is it just much easier for you to write out a check? Because again, if you want to write out a check, I will gladly give you my PayPal account, and I will personally show you how to set up a chart, right? You see how stupid that sounds, guys? So a new trader, get your ducks in a row. Going to the new week, guys, again, I don't want to get into a lot of it. We'll talk about it tomorrow in the live webinar, so please get to morning strategy. We start about 5 minutes after 9. I kind of don't like what I'm seeing. I just don't. Based on what we saw last week, I just don't like what I'm seeing. I want to give the bulls the benefit of the doubt. Okay, I do. But when I'm seeing constant selling pressure as the Dow is up 3 days in a row of 200 points each, a lot of red flags. We have a lot of contraction, a lot of red flags. So something's going to give, right? Something's going to give. So going into this week, it's hard to say I'm biased. I want to see what happens Monday, okay? I want to see if the bulls can't rally with the futures, right? If these beta names can't rally with the futures, your Amazons, your Googles, your NVIDIAs again, well, I'm going to start getting into the sell side bias. I want to see what happens on that first sell-off, right? If they don't sell off, right, and they put in the floor and they start putting in higher lows on a 60-minute channel, I want data. I want a collection of. I want to collect data because so before we jump out of the window, come Monday morning, I want to see. I want to see these stocks prove to us what they want us to do. Okay, it's our opinions don't matter. I don't give a. I don't give 2 cents of any. Any degree of certainty. I'm an idiot. I'm the king of the idiots. I want facts. I want data. I want to trade on that data. And when that data confirms, that's when we get into our sweet spot. Guys, God bless everybody. For those of you guys who are joining us via our live webinar tomorrow morning, we start at 9 o'clock in the morning Eastern time. And ask a lot of questions. That's the whole point. You'll see these pivots play out live. That's the whole point. And the most important thing is we're not creating schmucks. We want to create self-sufficient, standing on your own 2 feet, adults who make adult decisions. Guys, God bless. Enjoy your Sunday. Love you all. For those of you guys who are not joining us, see you next week. Have an awesome, awesome trading week. God bless. See you all tomorrow.